Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for today's show, David Blain. We thank you for joining us on 94.1 FM WNBU as well as cable TV 10 in New Bern. We've got an excellent show lined up for you today. If you have any comments or questions on the show or topics you'd like to have addressed on the show, feel free to contact us. Our phone number is 252-633-0107. Our email is allthingsmoney@dlblain.com. That's dlblain.com. And you can always visit us on the web at www.dlblain.com. There you'll find information about myself, my firm, as well as archived copies of the show. So with that out of the way, let's get right into it today. I thought we'd start off with an interesting story that I came across. This was from, it was actually on MarketWatch.com, but a lot of the basis for the story came from Forbes, and I'll tell you exactly where to get that as we go through the topic. But this is a story that was talking about the high-frequency traders that dominate Wall Street. And on this show, we encourage individual investors to take a long-term approach to investing and to try to stay out of the way of the Wall Street machine, turn off CNBC and that sort of thing, and set your long-term goals, set an allocation that has a reasonable chance to get you there, and just, adjust it along the way as necessary, but stay away from the high-frequency trading. And that's what this article is about. We'll talk a little bit about, they're called the HFT quants, or high-frequency trading quantitative mathematicians. And as we go through here, they say they're killing us by huge margins on the new playing field, a parallel universe called the singularity that's virtually replaced the New York Stock Exchange and other exchanges as the new arena for trading securities. And so what this means, the old days of the New York Stock Exchange where you would call your broker and place an order, and he would actually be on the trading floor and he would say, 100 shares of Coke for $50 or whatever. They had these trading posts where Coke would be traded and they would shout orders back and forth. If you haven't been paying attention, that's pretty much gone, the way of the buggy whip. But there are still stocks traded on the New York Stock Exchange and the NASDAQ. But there are these other exchanges that have come about with firms trading directly with them, and they're very high-speed methods of trading stocks that allow these traders to trade, thousands of securities a second. And this Forbes article goes on to say the new masters of Wall Street, even as financial markets collapsed last year, high-frequency traders enjoyed $21 billion in gross profit, while some high-frequency traders are sending out 1,000 orders a second. And so you sitting at home there with your computer trying to compete with these guys, it's just not going to happen. The individual investor, if you try to play this game, you will lose big. In this Forbes piece, Liz Moyer and Emily Lambert go on to warn, one eye-bracing reality is a big chunk of high-frequency profits derived from jumping into markets before small investors can. In the high-frequency world, the 20 milliseconds it can take, quotes, to travel from Chicago to NASDAQ's market site in New Jersey. The HFT quants are always ahead of you skimming your money. And so these people are trading in the milliseconds and reaping huge, huge profits. Last year, the Wall Street banks were basically insolvent, collapsing, and taxpayers sort of stimulated them back from the dead. And now Wall Street again is racing at hyper speed, and these what they call too stupid to fail banks are now stealing from Main Street's too dumb to stop trading investors. And so, we want to make sure that you stay away from being on the other side. Whenever a stock is bought or sold, you have to realize that someone else is taking the other side of the trade. So if you are selling something, then someone else has to be buying something. If you're buying something, someone else has to be selling something. And the majority of the time, it's not, your neighbor down the street that's doing it. It's these high-frequency trading firms. It's the big firms on Wall Street, and they're usually not, keeping them for their own account. They're skimming a little off the top and then pushing that security on to someone else. I thought it might be useful to go through a little bit of who are these high-frequency traders, and this is just a great description of this. If you had any notion of competing against them, just listen to this. This man, Ray Kurzweil, he's an inventor, entrepreneur, futurist, artificial intelligence visionary who thinks at hyperspeeds. He predicts the new reality in bestsellers, that the age of super machines when computers will exceed human intelligence. And he talks about how that computers are accelerating returns, and of course Moore's law that explains the evolution of technology. And if you look today, that some of this futuristic thinking is actually here. These traders are light years beyond just Main Street, but also Congress, the SEC, the Fed. As this article says, in the immortal words of Captain Kirk, they've gone where no man has gone before. They have created this singularity where computer intelligence essentially exceeds human intelligence, and their superpowered math algorithms far exceed the primitive human intelligence of the average Main Street investors. Where Main Street investors are called irrationals by behavioral economics, and gamblers and con men call us a mark. Forbes bluntly put us this way: trading for dummies. The role of the sucker on Wall Street has traditionally been played by retail investors, and that's you. So as they go through this article, talk about some of the technology that these traders employ, some of the methods that they employ. And the crazy thing is, even as Wall Street admits that these people are out there and that they're out there taking the other side of your trade, that they still promote things like, streaming quotes and, things like that will enable you to compete. I've seen TD Waterhouse have these advertisements where, they're promoting, you get streaming quotes. Well, I don't think it's quite as fast as these folks are trading. Well, we're coming up on a break. I want to continue with this topic. There's some really very interesting statistics on the type of computers and things that these folks use. So we'll hit that right after the break. So for All Things Money, I'm David Blain, and we'll be right back after a few short messages.